before starting investing in the stock market, I wanted to go deep. I wanted to know how the game worked. I wanted to know all the rules. And I think one of the rules that a lot of people has forgotten or hasn't learned yet in 2020 is that the first rule is not to lose money. And the second rule is to learn rule number one. I think Warren Buffett said that, and it applies today. And I know a lot of people are still losing money because they forget about that number one rule. I get a lot of people who wants to invest in the stock market, and they come up to me and be like, yo, Hank,
how do I start investing? What should I buy? Should I buy
Amazon? Should I buy Apple? Should I buy this and that?
They start showing me stock quotes and opinions of other people. For this video, I want to go over 5 things that in the stock market that is making you lose money. Welcome to SimpleChew. I'm your host, Hank, and I'm your typical awkward, boring accountant. I've been doing this for 10 years. I also run a resale business for the past 5 years. Also, if you've been following me for so long, it will help me a lot if you like the video. Every like that you give it is going to be rich vibes going your way. Also, if you are new, welcome. I suggest you to subscribe and also hit the thumb bell because I deliver videos every Mondays and Fridays, and I usually talk about investment education, resale education, and also tax accounting. And I also have a free ebook for you guys that I wrote. It's about investment 101. If you want to learn how to invest, you don't know how, I wrote a whole ebook for you guys free of charge. You just have to go to www.simplechew.com and it's yours. The first mistake or the first thing that a lot of new investors or any type of investors that are making nowadays is they're getting really lazy, or they're not doing any research on the stocks they want to buy. They just look at the stock quote and they think that that's enough as a research. And do you see the chart how it's going? This is the chart that I'm talking about. They just look at that and they think that as long as it's going up every day, this is a great investment. They look at the future and they see like 5 years ago it was doing really well. It was 10% up every year. And they keep looking back and when it was an IPO, and they see that, hey, it's been all growth all the time, little bumps here and there, but they don't think that those bumps can apply to them. And that's just a terrible way of investment because the stock quote doesn't tell you a lot. It's just a little snippet of what's going on in the price. It doesn't tell you anything about the company that you're buying. Essentially, when you're buying a stock, you're buying a piece of the company. You're going to own a piece of the company. You want to know what kind of business you're getting into. You just want to randomly go into buying random companies that you don't understand, because then that's how you get burned. And that's how a lot of people getting burned, because they look at the stock quote and then that's all the research they do, and then they buy, and then the next day it drops to 20% down because something happened and they don't know what happened, and they try to figure out what happened. They can't figure it out because they never did the research of what the business was. Maybe the business was about chemotherapy. They're working on a new medicine or something, and then it got approved level 1, level 2, and then before it got level 3 they didn't get it approved. So now the value of the company, and it goes to 0. So you lose all your money if you invest in that company. This is one example. If you don't understand the type of company that you're buying, you're not doing any kind of research, you're definitely going to be burned. It's easy to get really excited about the stock quote and how the prices are doing, and the prices are definitely not. It doesn't tell you anything about the future. It just tells you the price of the day. I think the second mistake that a lot of people are making is that they're listening to the friends on advice on buying stocks. I think that a lot of us are very sociable and we take very seriously people's recommendations. If somebody tells us that a restaurant is really good, we're gonna go to the restaurant. That's really me. Like, somebody tells me that a specific restaurant is really good, or they serve a type of food that I like and they do it really well, I'm definitely gonna go there. If somebody tells me that a type of clothes really worth it, I'm gonna buy that clothes. Word of mouth from friends and families is really worth it if you're gonna buy something that you want, like a product or a service. Worth listening to your family and friends. But when it comes to stock, it's just terrible business. I've seen it all over the place where people, families and friends tries to guess what's gonna happen with a stock or a specific company. They think they know the insides of this company, and then everybody gets burned, and then that family member or friend gets rejected by everybody. Everybody is mad at that person because that person made everybody lose money. And it's easy to get caught in the moment of, okay, everybody's investing, let me throw a couple thousand in there and see what happens. Maybe it goes up, maybe it goes down. And at the end of the day, I mean, it's just bad investment. It's just bad way of investing your money. It's a guaranteed way of losing it at the end of the day, because nobody's probably not doing any research because of the first mistake a lot of people are doing. And second of it, somebody is going to be pulling out before the stock goes down, or somebody's going to get blamed at the end of the day for suggesting this stock. And even if you're choosing a blue chip type of stock, there's still risk into it. Like maybe it doesn't grow as the person who suggested you that the stock is gonna be growing. So you upset that you're not getting rich fast or whatever. So there's always gonna be an excuse. It's gonna give you an excuse to, if you're not making money, to blame somebody else at the same time. So sometimes it's easier just to listen to friends to buy, and it's just terrible. And I've seen it happen, and a lot of people that I know has followed those advices, has lost tremendous amount of money. The third mistake is combined with the second mistake where you're trying to be the herd. You're following people's speculative people who are suggesting that they're going to buy a specific stock because they think that it's going to go up, and for some reason they have some inside information that sometimes it comes out of thin air. Nobody knows what's coming. And these people, usually you find them usually in your job, or if you go to lunch, you have dinner with colleagues or co-workers. So somebody's always talking about stock, and they're not really your friends, but you listen in. Sometimes there's your boss or management, upper managers talking about some specific stock or something, and then hey, they must know something you don't know because they're upper management or something, and boom, that's how definitely you're gonna get caught, and you're definitely gonna be losing money because they're just talking ideas. Sometimes they don't even buy these stocks. They read something in the magazine or the newspaper, and then boom, you think just dinner conversation that you just want to talk about. And if you take that information and you think that is valid, you're gonna get burned. Also, sometimes they talk about their stock portfolios and what's doing well for them, and then you start following them. Everybody's been following the same type of stock or buying the same type of investment. So if you're following the same herb, everybody's in it already. It's too late to make any money. The fourth mistake that a lot of people make is reading the newspapers or the news and getting their ideas or suggestions from it. I have a subscription for Wall Street. I don't take it really seriously. I just read it because it's just fun, and I want to know what's going on in the world. And even for that, I don't even really trust it that much. I just read it to read it. But a lot of people take their advice from the Wall Street Journal, or they take a lot from the Bloomberg channel. A lot of people watch that stuff for hours and hours and hours, and they get idea. They start suggesting about a specific company, how they're doing. They start talking about lawsuits. They start talking about earnings and how somebody did a good thing for the community. Some company did so good for the community, and then you start thinking, oh, maybe that's goodwill, so I should buy it because people gonna appreciate that. And then you hoping, you're speculating that it's gonna go up. Anything that the news tells you is just bad idea to buy. Even if it's bad news, I know that for a little bit I was looking at the news and there was like a lawsuit or something. I would research that company really deeply to see if there's any value there and to see if people are dumping all their stocks because of this news. If you start playing that game too, the opposite game, you're still gonna get burned because the news, it doesn't predict how the market is gonna do. It doesn't predict how a specific company is gonna do because that's even harder to predict. So it's a bunch of information that is useless. You can read it, you can watch it as an entertainment if you want, just to see overall how the whole market is doing. That's what it's good for, but it's not good for your money and to start investing. The fifth mistake is a little more complicated. It's more for the experienced investor or somebody who is still intermediate, but they want to copy another stock portfolio from a specific investment institution or investment banking or banker, and they want to mimic their stock portfolio, and they start buying the same stuff that institution has. Big mistake. I made a whole tutorial how to find out if what investment institution has in the stock portfolio, and you can see if there's something, if they dump in a stock, it's a good idea. It's just another way of researching. It's just one of the many things you can do to research a specific stock or industry, and you can go and see these institutions to see what they're buying, what are they selling, and so you can see it there. And I think a lot of people, a lot of investors, they think that, hey, if this investment company is buying Apple, maybe I should get into it too, or they're buying this random company that you never heard of or don't know the business. You see them buying like 1 million shares. You're like, hey, maybe I should get into it too, because if they know something maybe I don't know, they're smart. The thing is that with a lot of these institutions, investment institutions, that a lot of them they're not playing with their money, they're playing with investors' money. They are really aggressive. They're really trying to make money for their investors or their clients, most likely. So they're not really playing with their money with it being conservative. They're being really aggressive, taking a lot of risk because they want to see growth on their stock portfolio for their clients. So if you're following them and you don't know, you're not really calculating the risk that you're taking, you're definitely gonna get burned, and you're definitely gonna be losing money because because if they lose money, you know, it's no big deal. Another pile of cash is coming for them to keep playing the game. And when you start playing it like that, you know, it's like it's a casino type of game now. And you know, you're playing the odds, you're playing the black swan. If the swan is around, you're gonna get burned because nobody's expecting the black swan. And once it hits, and what I mean about black swan is just unbelievable event that just nobody was expecting this event to happen, or this crash to happen, or this bubble to burst. That's a black swan. Nobody wants to think about it like that, you know, because a lot of people just see white swans and they think that a black swan never gonna happen or never is gonna appear. And then when it happens, we're shocked and you lose your money, you lose your pension. The roulette game still continues. So following those institutions is just a bad idea. You're gonna lose your money because you're like in a casino. You're playing the odds now, and the odds is not gonna be good for you as long as you're in the game. Thank you guys for watching. Hopefully you guys learned that the first rule is not to lose money. Thank you guys, and always remember to keep it simple.